Hello and welcome to another short video from investingsuccess.ca. Today is January 25th, 2023, and in this short video I want to take a look at a banking stock. Bank of America, ticker symbol in New York is BAC. I don't think Bank of America needs much else in the way of introduction. It's a multinational investment bank, financial services company, 4,600 retail branch locations. As far as banks go, this is the 800-pound gorilla in the room. This organization is big. Let's dig a little bit deeper and see what makes this thing tick. First thing I need to address is the inverted yield curve. If you've been listening to the financial media of late, you'll know that they've been hammering away on the concept that the yield curve is inverted. They're fixated on the 2-year Treasury note yield, the 10-year yield, and normally in a normally structured yield curve, as you go further out in time, interest rates should increase. Therefore, companies such as banks that borrow at short-term interest rates and lend out at longer-term interest rates will capture what they call a spread, and that spread translates into their profitability. Financial media will have you think that we are headed for the mother of all recessions. I'm not convinced. Yes, the economy is slowing down as the central bankers siphon off liquidity out of the system. I think what we're more likely to get as we go further into 2023 is a quarterly earnings recession. I think you're going to see a number of companies that come up a little bit short of what analysts had been expecting, predicting, and I think that's going to put some pressure on stocks. Is that going to necessarily derail the financial earnings of something like Bank of America? It certainly will have an impact, but I don't think you're going to see the carnage that the financial media would like us to see. In terms of ratios, Bank of America, PE ratio 9.5 times. A collection of other major U.S. banks has a PE ratio of 8.5 times. So relative to a larger group of its peers, yeah, it's right in the ballpark. Now here's the number that sort of caught my attention. The operating profit margin, 33%. That is above and beyond other U.S. banks. Bank of America is a money maker just by its sheer size and the number of branch locations and the number of customers. So as is the case with any stock that I look at, the first thing I do is I generate a chart. And here is a candlestick chart, Bank of America. The next thing I do is I overlay the 200-day moving average. And in accordance with the method outlined in the early 1930s by Harold Gartley, that 200-day average is the deciding factor, the dividing line between bullish and bearish major trend. So you can see that back in February 2022, when the central bankers, Jerome Powell, made good on his promises to start siphoning out liquidity, raising interest rates, look at what Bank of America price did. It fell below the 200-day moving average. The major trend shifted from bullish to bearish. Price tried to recover in March, couldn't quite do it, had a significant decline into July as interest rates continued to be nudged higher. Going into August, it had a little bit of a rally, couldn't quite sustain itself. Made a second low in October, tried to rally from there, got above the 200-day, but couldn't hold, fell back down. Recently, this month, tried again to get above the 200-day, fell back. And at the time of me making this video, it's trying again to get above the 200-day. This thing is determined. So let's just see what happens here. Now, the other line that I draw on charts is shown by this green line that's descending from March through to October. That's the intermediate trend line. And you can see that from March through to October, the intermediate trend definitely was bearish, and price was having trouble getting above it. However, in October, the price did get above the intermediate trend line. And now I think we can argue that the intermediate trend on Bank of America has actually shifted to bullish. So what I'm seeing is, if you draw a line from the October low and you connect in the December swing low and the January swing low, we are making a series of higher bottoms, and that is what Harold Gartley would define as a bullish intermediate trend. So we are right at a crossroads here. We've got a bearish major trend, but the price is trying to get above that, and we've got a bullish intermediate trend. Something has to give, and we are right at the critical juncture. We are either going to get above the 200-day and continue higher from there, or we are going to fail in spectacular fashion and everything is going to remain bearish, and we will come down to maybe test the October lows. So critical time, all eyes are going to be on Bank of America. Now, the other thing that I typically draw on these charts is horizontal dashed lines, and you can see I've got one in October, another one at the current time. And if you have listened to some of my previous videos, you know that these are part and parcel of W.D. Gann's methodology on swing trading. What you're looking for is price to take out a previous swing high, and you can see here in October, absolutely, that's what happened at around the $32 level, and then from there price rallied up to almost 38. We are once again at one of these opportunities here. If price wants to get above the 200-day, it is next going to challenge the previous swing high from earlier in January. And if we can get above that prior swing high, then we conceivably could see a rally, which I think at minimum then would test something in the $39 range. So critical time, critical level that we have to surpass here in the coming days if we're going to move higher. The next thing I look at when I dissect a stock, of course, is the natal horoscope. And Bank of America had its IPO on the 13th of January, 1978. And here is the horoscope chart for January 13th, 78, showing the placement of the planets. I look for interesting geometric patterns, and you can see that I've got one outlined in yellow. It's a triangle. And the 3 points of the triangle are Mercury, Saturn, Jupiter. And I've also got my eye on Moon, because I'm going to show you how Moon plays a definite role in Bank of America price swings. And so what I'm going to be looking for going forward then is planets that are passing these critical points in this unique geometric pattern. I'm also going to be looking for planets as they pass the natal sun, located at 23 of Capricorn. Okay, so here's our chart, and what I've done on this one is I've simply overlaid a number of astronomical cosmic occurrences just to illustrate to you the connection between human emotion and price going up or down and swing points on the chart. So I'm going to draw your attention here to July of 2022, and you'll see that I've got a notation Moon at natal sun. Well, that was a swing point on the chart. Why? The Moon was passing the 1978 natal sun location. Human emotion was triggered. People became positive. They started buying. Price rallied into August, and at that point you had Moon passing natal Moon, and in the same time frame you had Venus passing natal Mars. So there's a pair of cosmic occurrences, and they were powerful enough to shift human emotion. People became nervous, and they started selling. October lows. Yes, the overall market generally made lows in October, but in the case of Bank of America, that October low also coincided with Moon passing the natal Jupiter point in the first trade horoscope. Price rallied then into November, and you had Moon and Mars in a short span of time, both passing the natal Jupiter point. You also had Moon passing the natal Mars point, and that resulted in a price peak, a swing, and some uncertainty as people started to second guess and take some profits and move money out of the trade. You had another swing point in early December when Moon passed its natal Moon point. That one was enough to really trip the switch, and people started to sell in a meaningful way, and they drove the price all the way down to a swing point in December. Lately, we've had, of course, Sun passing the natal Sun point, and at that, we got above the 200-day, couldn't quite hold it, and we slipped back. And so what I'm going to be watching for now in the coming days are any other cosmic occurrences, particularly those involving Moon passing some of the key points of the natal IPO horoscope. The other thing I look at oftentimes with a stock is the declination of the Moon. That is the, as we see it from our position on Earth, how high it is above the horizon in the sky. A lot of times I will find a connection between share prices and the declination of the Moon, not with Bank of America. And so there are connections, but not consistent enough for my liking. So therefore, I am not going to consider declination of Moon as I analyze Bank of America stock. I look for harmony with science and nature, and in my mind, harmony with science and nature is always expressed through the Fibonacci retracement ratios. And you can see that from the November swing peak to the December swing low, we actually retraced Fibonacci 78.6% of the October through November move. Anytime I see a stock retracing 78.6%, that more often than not is the end of it. You're going to get a swing and a reversal in price. Every now and again, you will see a stock that will blow through there and continue on. But in this case, the 78.6 was a critical turning point. Now, I want to show you something else that's very interesting. A lot of times we look at a stock chart and we see ups and we see downs and ups and downs, and we don't actually stop to measure. Consider the price move from point A in August of 2022 down to point B in October. What you don't immediately notice on the chart is that is very similar to the move from point C down to point D. So there's an example. This is a stock that is behaving harmoniously with Fibonacci, with nature, with science. And we just don't immediately see these things when we glance at a chart. But I always check. And when I see a stock that's trading harmoniously like this, where the moves are equal to a prior move, that gets my attention. Another thing I want to show you in terms of the Fibonacci 23.6% ratio. If you take the move from point B in October up to point C in November, what you don't immediately appreciate just by glancing at the chart is the length, the magnitude of that move is actually equal to 1.236 times the amount from C to D. So the move from B to C is actually a 23% extension, 23% Fibonacci extension of the move from C to D or A to B. When I see moves that align to Fibonacci extensions, that gets my attention. I'm liking this stock. It's got some behavior that really enamors me. And lastly, when I look at a stock, astrology aside, swing points aside, I always look at the technical chart indicators. And as I've mentioned in prior videos, one of the ones that I use is the slow stochastic, pioneered in the mid to early 1950s in Chicago by a group of traders led by a gentleman called Ralph Dystant. Back in those days, they didn't have computers to generate these indicators. It was all done with adding machines, pencil and paper. But these guys in the 50s used these oscillator type stocks or type indicators, and they made uber amounts of money trading commodities on the Chicago Board of Trade. Well, today, with the click of a mouse, I can have the software program generate a slow stochastic. What I look for, ideally, is the slow stochastic to certainly be above the bottom boundary, the 20 level. But really what I'm looking for is the stochastic to get above the upper bound. And the upper bound on the slow stochastic, the so-called 80 level, that's actually referred to as the buy signal. So I just want to show you very quickly here. If we go back to October 2022, I've got a blue arrow on the stochastic here. And you'll see that I've got some green lines that overlay the chart pattern. And what do we have in the middle of October? Well, we have an opportunity for price to get above a prior swing point, which it does. But as it does, look at what the stochastic does. It gets above the upper bound. It penetrates the buy line. A buy signal is generated. Yep, you could have bought the stock much lower. No guarantee that it would have rebounded and turned. It might have rebounded a little bit and then continued lower. But by waiting for price to take out the prior swing peak, as per WD Gann, and confirming that with a move through the upper bound on the slow stochastic, now you've got an entry point for a trade, which turned out to be a very good one. Similar situation occurred in late December 2022. Yeah, you could have bought the stock much lower, but by waiting for the price to take out the prior swing high and getting a confirmation of the stochastic crossing above the buy line, you had the makings of a trade. Now, I just want to clarify one thing here. You're probably looking at this dashed line and this swing high, and you're questioning what I've done here. I typically will look at the closing price when I draw my lines to delineate my swing peaks. And in this case, this is a picture-perfect example of where on the 12th of December, price rallied hard, but it set back on itself. And so by considering the closing price as the threshold that we have to get above, that's what occurred later in December and was confirmed then by the stochastic. So here and now, today, January 25th, where are we? Well, take a look at your stochastic. We're not quite there yet. The stochastic has crossed positive. Could you buy the Bank of America stock right here, right now? Sure, you could, but there's no guarantee that it's going to work for you. It could easily double back on itself and it could continue lower. So what I'm looking for in the way of a trade setup, I want to see price get to the prior swing high made in around about the 15th of January. We have to take that out, and that's at about $35.50. And if price is going to take that out, I want to see confirmation on the slow stochastic that it's going to penetrate the upper bound, the buy line. When I see those two parameters being met, my attention is riveted on Bank of America, and I'm buying the stock for a short-term trade. So pull out your ephemeris tables or generate them online. Flip back through the pages of this video. You've got the 1978 natal horoscope that I've given you. What you're watching for then is primarily the moon passing several of the key natal planets in that horoscope. You're watching then for swing points on the chart. You're watching for price advances and declines that unfold in accordance with Fibonacci retracements or Fibonacci extensions. So everything has to evolve in harmony with science and nature, and it has to be confirmed then by the technical chart oscillator, the stochastic. And if you can make that happen, or if the stock will make that happen for you, now you've got the basis for a trade and an entry point. So thanks for watching, and as always, I am the author every year of the Financial Astrology Almanac. The 2023 version is out, and because my publisher has made arrangements to have it published through a US-based organization called Ingram, if you are in Australia, the United States, Canada, the UK, go to any big bookseller, and they will source the actual printed book for you through Ingram Printing and Publishing in the United States. And I even think they have, I think Ingram has print-on-demand services in these various other countries. So go to your bookseller, and within days you'll have it in your hand. If you are the type that prefers electronic ebooks, Kindle, Kobo, yeah, you can find it. If you like Amazon, absolutely, you can place your order on Amazon, and they will do the print-on-demand thing and have it in your hands in a matter of days as well. So keep your eyes on Bank of America, and keep your eyes on this YouTube channel. And in the coming days, I'll be out again with another stock pick, and we will dissect it using science, nature, and astrology. Have a great day. Thank you.